maybe, for example, if I was to have, let's say, a service contract with Umer here, and I'm working under that contract and I'm recognizing revenue, let's say there's some sort of a performance metric that I would need to meet before I could actually bill him for the work that I've done to date. Under IFRS 15, you'd see, if I've recognized revenue, you'd see effectively the assets, the corresponding side of that recognized as a contract asset rather than receivable. So you'd be able to see that there's something other than just sort of passage of time before payment is due. So I suppose my answer to your question would be a little bit about saying, I think you have to look at the totality of the information that you get through the financial statement. So the income statement provides you with your performance, performance measures. Then obviously in the cash statement, in terms of the churn of, for example, the revenue into cash, but obviously you need to look carefully at what's going on the balance sheet too, for example, in your revenue accounting, and watching, are the receivables increasing? Are the contract assets increasing? And what does that tell you in terms of what does that mean for the revenues that have been recognized? So to me, it's a bit about looking at the complete picture that you get from all of the information pieces that come through the financial statement. But yeah, it's an interesting question, but I don't think the income statement itself is obviously going to sort of show you to what degree are your earnings, your revenues, etc., are those coming through as cash realization. I think you've got to look at the complete package to get that.
Yes, hi, my name is Zulfikar. My question is not specific to any of the standards or any of the matters. Rather, it is more about the countries like in Pakistan, where we have very restrictive law requirements as to what can be distributed and what cannot be distributed by an entity in the form of dividends. So when setting the certain accounting standards, I'll give you an example of, say, IFRS 2, where we record an expense and a credit to equity in case of equity settled payments. So essentially nothing happens onto the equity, but my distributability severely gets impacted in form of an entity. And I believe the same thing will happen when we move forward with the business combinations under common control. So maybe a similar situation will come up in whatever resultant standard comes in that respect also. So if you could just explain how the board thinks about these factors, and what sort of suggestions would you have to deal with such restrictive legal perspectives as to distributability within the context of IFRS requirements?
I think my general comment on that would be to say, remember what the board's objective is. They're creating general purpose financial statements. So effectively, the point about distributable reserves is often actually that has to be determined at a different level than effectively the consolidated financial statements that might be published. But effectively that's a matter often for regulators and additional regulatory requirements, rather than the matter for effectively standard setters in writing general purpose financial statements.
Hi, my name is Zulfikar as well. We had a seminar today here in Pakistan on IFRS 16, and we talked about the two different approaches to transitioning. One is the full restatement approach, and one is the modified approach. In the context of capital markets and how they react to preparers' release of financial information under these two approaches, how are you seeing the reaction in the capital markets community, and also in terms of the population of preparers? Are more of them leaning towards the full restatement approach versus the modified approach? Do you have any sort of indicative information on that?
Okay, that's a really interesting question. I'm sure you've had a good discussion this morning about all of your questions around applying IFRS 16. I don't have any information just to hand, but I think I think a lot of companies are using the modified retrospective approach in the context of applying IFRS 16, because of course that also allows them to pick up some more reliefs, for example, about how you approach discount rate questions on the point of transition. I think you raised a really interesting question about how the users are approaching it. It's not actually a question that I've had the opportunity to sort of put to some investors. But what I suspect is that they find it easier to deal with the modified retrospective transition approach in the context of IFRS 16 than they do, for example, in the 15. Because I think IFRS 15, they're very much looking at trend information on revenues. And therefore, companies that had significant change as a result of the new revenue standard that use the modified retrospective, it was, and I know this from some of the discussions I've had with users, they might have struggled to effectively understand the trend and effectively how much of any change is to do with the new accounting standard versus changes in operational performance that happened in the period. I think with IFRS 16, because it's a very clean change, switching for, basically the operating leases that were previously off balance sheet and coming on the balance sheet, I think it's an easier transition for the users to understand and for them to understand from a modified retrospective approach whereby you don't restate the comparatives. So I haven't seen anything or read anything that suggests that users are struggling with that approach, because I think that is the approach that many companies are taking to their adoption. But of course, one of the things you have to do under IFRS 16 is that you're kind of reconciling back to the information that you were providing under IAS 17 with the operating lease disclosures. So a lot of companies are paying a lot of attention to, or were in the transition period, to the reconciliation between the information that they were providing for the off-balance sheet leases to what was going to come onto the balance sheet for the initial recognition of the lease liability. But I think if what you're starting to see now is some, user sort of reports about the transition effects and how they've been approaching, analysing the initial application of IFRS 16. Because effectively there were some early adopters last year, and so I think some of that information is sort of filtering through into sort of publicly available reports about the implementation.
My question would be on the business combinations and requirement control. This is an area on which ISB is working on, and currently I understand that in context of various primary users, various models or different models are being considered, or approaches are being considered. As Cheng-Wu mentioned, that a paper is expected in next year on the business combinations and requirement control. Considering the nature and size of transactions in global market, what sort of timelines board is considering or thinking of till the issuance of the final document or standard on this important area?
Okay, yeah, well, I've noted the great interest that you have in this particular project. So if my colleagues working on that project are not aware of that, I'll make sure that they're aware of it. As mentioned earlier about this is an important project. It's one the regulators see as important given the diversity. In terms of the timescales, of course, it's always very difficult. We have a very open, thorough, transparent process. So for this project, I think the thinking at the moment would be that the board would issue a consultation paper. I'm just checking the work plan here in the first half of next year, and that would be expected to be a discussion paper. So that's sort of the first step in the process. So the discussion paper itself will then have a comment period for our stakeholders to comment on of at least 4 months. It could be a little bit longer, but at least 4 months. And of course, the board will then have to listen to all of that feedback, analyze that feedback, and from that feedback, the board will then develop a draft of a standard. That draft will be an exposure draft, obviously, of a standard. That then gets published for comment, again, because it's a major change to IFRS with a wide applicability. That itself would have at least a 4-month comment period on it, and then the board would go through another round of consultation. So you can start to see effectively that the timeline for even issuing the standard takes you out into the future, and then of course you allow a period, let's say, of at least 2 years after you issue the standard before it becomes effective. So effectively, a new standard having to be applied is a number of years off in terms of business combinations under common control. It's just the process that we have. If you want to have a thorough due process, it effectively comes and it takes time to develop standards with that sort of thoroughness of engagement to create high quality standards.
A related question would be on the IFRS for SMEs. The requirements for IFRS SMEs are based on the legacy standards, for example, IS 17 related or IS 18 based. And a vast number of companies in Pakistan and globally as well use these standards. Is there any expected project of revising these standards on the basis of the new standards? And what would be the timeline if there is any expected revision?
Okay, yeah, that's another good question about another important aspect of our work, the IFRS for SME standard, obviously the sort of single standard that we developed, I think, and issued back in 2007, I think it was, for SMEs. So one of the commitments we made for the IFRS for SME standards is that we don't constantly tinker with it. So we published the standard, and then we sort of said we'll make periodic updates to the standard, but people using that standard shouldn't have to expect that the board effectively makes some amendments to it every year. So we have gone through a number of years ago the first comprehensive review of the IFRS for SME standard, and actually we made very few changes to the standard, I think, in that first review. Now, we've just started the process for considering the next comprehensive review of the IFRS for SME standards. So you will see on our work plan a project called the 2019 Comprehensive Review of the IFRS for SME standards. And your question hits at, actually, I think probably what is the biggest question for the board to have to consider as part of that project, which is, since the last comprehensive review, they've obviously issued a major new revenue standard, a major new leases standard, and a new financial instruments standard as well. And to what degree and to what extent does that get reflected in the IFRS for SME standard? That's a very fundamental question, obviously, and how they approach that will therefore determine whether or not there's quite a lot of amendments to the IFRS for SME standards or there's not. So I think what the board has done so far is that they've only just sort of had very initial tentative discussions about this. I think the board's trying to build some criteria that it can use to help evaluate that question. But the process will be that the board issues a consultation document to stakeholders to get feedback on how they should approach amending and updating the IFRS SME standards, obviously including the question you alluded to there, which I think is the really fundamental one. And I'm sure there are going to be different. I think some people would probably take the view that, you know, the IFRS for SME standards, the revenue model, for example, it works fine, it delivers useful information, so there's no real reason to change it. Others might take a view to sort of say it's quite important that the SME standard effectively keeps in touch with the philosophy of the main IFRS standards, and therefore they might see that there's a case for making a change. But anyway, no decisions have been made on that. The board will be going through a process to evaluate that type of question, but that will also obviously entail outreach and seeking feedback, which they'll do with a consultation document, which I think the board does plan to try and issue in the second half of this year. So I think that's obviously one to watch out for if the IFRS for SME standards is an important standard to stakeholders. And of course, actually, the IFRS for SME standards is probably used more widely than full IFRS around the world.
Thank you, Henry and Omer, for joining us in our session. Thank you very much. It was indeed very enlightening to know the updates through you.
Well, thank you very much for giving us the opportunity to join into your conference. Just a quick one, I should have said at the start, obviously anything I sort of said, we said was our own personal comments, but we hope it's been helpful just to provide a little bit more colour onto what you heard Chung Woo explaining about the work of the board. But thank you very much indeed.
Yes, Henry, again, thank you from the Institute of Chartered Accountants of Pakistan standpoint. And I wish we could have hosted you here in person in Pakistan sometime. But for now, I think since very late, people are also very tired here. So we have many, many questions, but that we'll hold it for some other time. And thank you very much.
Okay. Now this brings us to the very last lap. I can see everybody's very tired, as well as I can see a lot of people have gone, but we're just rounding up with just another 15 minutes with a quick panel discussion on rounding up IFRS 16. I shall quickly invite our speakers, Hina Sadiq, Suhail Malik, Zulfikar Kausar, and our moderator, Irfan Mustafa. Please join us on the stage. Irfan is working with us as a subject specialist at ICAP in our examination department.
Assalamu alaikum. Thank you for your patience and bear with us with further 15 to 20 minutes. I will try my best to make the section interactive. Just to start with, I will ask one question from the panelist and then the floor will be open for your discussion. Starting with Mr. Suhail. Suhail ने एक बड़ी अच्छी presentation दी हमें transition options के हवाले से. Suhail, हमारा एक सवाल ये है कि if you were deciding the transition options, so which option would you have opted and on what basis?